Okay, Michael Bovee, Consumer Recovery Network, and this is our YouTube channel, DebtBytes. Thanks for tuning in. So today, bringing Jared, who's with me for several segments already. We're going to do this one about dealing with your home and either equity in it when you sell it and late stage collections, or you are trying to buy a home and get a loan approved, but you had some tough things happen financially and you let some bills go and they're still on your credit report. What your perspective should be when you go out there trying to accomplish new financial goals because things are on the mend. Jared, thanks for joining me. You're from avoidbk.com and you're a former debt collector, a highly successful one, won a bunch of awards, and knocking down debt settlement as a business model was an easy transition for you. We should probably do a video sometime about that transition. But focusing on what a debt collector sees about somebody trying to buy a home, trying to sell a home when they've got collection accounts. Walk me through it.
Well, I mean, this is the pinnacle of collection, right? So someone's behind 3, 4, 5, 6 years, and they're better now. They're recovered. Not to the point maybe where they've taken care of their old debts, but to the point to where they're comfortably surviving again, at least, and they have desires and aspirations to buy a house. And what these people aren't thinking about, and not just them, but the professionals in which they're working with as well, i.e. mortgage brokers, realtors, etc. That's why I hope this video gets shared through those communities, so that way we can get the word out on this. But it's the pinnacle of collection. You get a phone call out of the blue from a consumer. You pull a current bureau on any balance above 1,000. That was the protocol when I used to be in the industry. Literally, just hit a button, get a fresh credit report. It's 30 seconds old. And first thing any collector who's been properly trained is going to do is go down the inquiry section and look for mortgage inquiry. And because there generally is a reason why someone is calling 3, 4, or 5 years after the fact to address these issues, and that reason is generally why. And the reason why I call it the pinnacle is because the collector knows that your mortgage company, more than likely, especially if the balance is above $1,000, is advising you, the consumer, that you have to take care of this debt before you'll qualify for your home loan. And collectors know this, and so they're put into an instant scenario where they have maximum leverage with no incentive to negotiate with you, because they know that if they hold out, there is a slight chance you might change your mind to buy a home. Usually not. Home purchases are very emotional. They know this. And they're going to hold out and try to collect the entire balance from you if possible. So my best advice to people, if you're contemplating buying a home or refinancing your current home, and you have outstanding delinquencies, collections, charge-offs, anything in excess of $1,000 individually or $2,000 collectively, and what I mean by that is if you have, let's say, 7 $300 collection accounts, you fall into that category. My advice would be to contact your mortgage or, mortgage person in this scenario, and have them pre-qualify you with your own credit report. Tell them, hey, look, I don't want you to pull my bureau. I will go to annualcreditreport.com. I'll pull one. I'll provide that to you. And at least you can kind of give me an idea of what I'm looking at as far as what will need to be addressed, if any, before I'll qualify. That is definitely the way to handle that. By doing so, you avoid the mortgage inquiry on your credit report, and then you avoid this very nasty scenario for you versus doing it the other way.
And it's costly. It's let's assume for a moment that you can negotiate a settlement less than half off of what your balance is on that 5-year-old debt. And now, in order to accomplish your goal, let's say it's a $10,000 account, and maybe the debt collector takes 10% off, but they don't even have to do that. They know they got you, at least at this moment, while you're trying to get, accomplish like you said, a very emotional goal. It's a big commitment. You probably even learned about it, that you would be turned down after you applied, and you have an offer on the home. So you're that far along the sales pipeline of your purchasing your home, and you're looking for any way to resolve it. and you will relent often enough. So some of the things that I've done, and some of the things like say for FHA type of underwriting standards, sometimes if it's just one account, you can get a payment plan in place with the collector if it's too late and you screwed it already, you're not going to be able to get your deal done. Sometimes payment arrangements for a period of time, the lender will still approve those. FHA does. In some situations, not all. But what are some other ways now? Put your debt relief hat on. And you're available for this. You work with people. In fact, I think a lot of the work you did in your early years offering debt relief services was for people that were in some type of home loan situation or sell a home situation. Now, as a debt relief guy, what would you suggest? What are some tips to think about?
Time. It's just time. Collectors, they get excited for about 60 to 90 days. After about 90 days or so, the party's over. They're not excited anymore. Simply because usually within 90 days of that mortgage inquiry, that refinance is going to happen, that home purchase is going to happen. If it hadn't happened by then, they feel as if you're not really seeking that approach anymore. And once they feel, once they lose that confidence, they become negotiable again. So it's literally like a light switch. It truly is. And that's what I do when I get clients, unless, they're in an enormous hurry. I get clients sometimes to where they're selling their home and they find out they have a lien on it 3 days before they're supposed to close on it. And that's a little different. So, I'll pull out my quiver and, but in most circumstances, people can wait a little while. And that's my suggestion. Just wait it out a little while and the excitement will dissipate.
Real quickly, let's talk about folks that are listing their home, right? So they had some problems and they had some collection actions in the court. And there's a judgment against them, and that judgment ended up being a lien on the property at the public record. So it's not something, title's going to find it, right? And so you want to list your home for sale, but you have unresolved judgments that can hold up the sale, or you could have negotiated those things differently had you not listed your home. Talk about that for a second.
Yeah, it really, selling a home, trying to refinance, mortgage inquiry to buy a house, all of these are fairly synonymous psychologically. These guys can easily, in a standard procedure for a collector, they're going to type in your address. If it's for sale, they're going to see for sale on Zillow or something along those lines. They're going to know.
Less than 30 seconds. The jig is up, the collector knows.
It's boom, very quick. And then you're going to have some issues. And again, time is your best friend in these scenarios, but not everybody has it.
Not when you got a buyer and a pending,
Yeah, and in those circumstances, I prepare my clients to just pay more, basically. I mean, you're going to pay a higher percentage settlement in that situation. I still feel like I bring value. I feel like, maybe with my involvement, they'll pay a little less than they would have.
We've covered some of your results. Yeah, you definitely provide value in those situations.
But at the end of the day, if someone is in a position to wait, I would recommend waiting. And then additionally, there's another caveat to this too, and I go over this on my website and how to kind of qualify if that settlement's, right for you or not. If you're thinking about buying a house and your accounts are 5 or 6 years old, you might want to think about just waiting to buy that house. I mean, if you have a significant debt load, that's going to cost you a significant amount of money to address. If you just wait, these accounts will fall off your credit report organically on their own at 7 years, essentially. So if you're only a year or two away from that time, you might want to have that conversation with your spouse or whoever else is involved and determine whether or not if maybe waiting to buy that home until that occurs is what's really in your best interest.
One of the synonymous things about almost every stage of collection, first, second, third, dealing with collection lawsuits, time is your friend. And then in some cases it's not with litigation, but boy, if you don't have to sell, if you don't have to buy, if you don't have to do those things, even though you might have started something, it's best to reassess. You might be watching this video. In fact, a lot of times people come across videos on our DebtBytes channel where they only learned about this is going to get in their way because of this. And now it's too late. So, sometimes you're not going to be able to accomplish your goals as quickly as possible. Thank you for this segment, Jared. Let's move on. And we're going to talk about one of the things that I think is the most fun to talk to you about, or at least how I've come to know you over the years and have fun talking to you about. It's about your business model. So thanks for tuning in. I'll see you on the next video.
All right, sounds good.